Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Yesterday we have little change concerning the larger time frame. We mostly, for the most part of the day, traded within Monday's range. The market was a little bit under pressure. You saw that part of that gap that we have at the open on Monday was partially closed a little bit. But we didn't go that far, and it didn't close completely. So on a larger time perspective, the monthly bar is still developing above the previous month. The weekly is still developing above the previous week, and on the daily we have a little bit of balance and value being found up here around the 3080, 3060 area. So no major change there. When we go to the market profile, you see that the market was immediately under pressure after the open. It opened and it went immediately down, but failed to take that poor low. So there was a little bit of volatility. The ISM number, non-manufacturing ISM, was released, and there was a lot of volatility. But when the market attempted to go to the all-time high, was sold hard, very hard. Now, what happened next is very interesting to point out, because after that selling that came on the B period, you see that the C, F, G, it's 1, 2, 3 attempts to go and close that gap and extend that morning high. That was not possible. At this point, it is very probable that the market has gone too short trying to sell it and not getting the extension. So you have a little bit of a bounce, a squeeze bounce. However, it was not a very powerful bounce. You can see that it got stuck around halfback, and as normally happens when you have this move and it gets stuck and it comes the session close, there was a little bit of liquidation, people bailing out of positions, like basically saying, okay, that's enough for the day, let's get our positions out and let's wait till tomorrow. So that could be this little bit of liquidation that you have here. But notice that even after you have that selling or forced liquidation, you couldn't approach the lows. So now the focus for today will be definitely on this afternoon range, with the levels denoting change, the M low and the K high. If you get acceptance above the K high, definitely increases the odds of going for the all-time high. There's only 4 ticks of excess above Tuesday. So I think it would be reasonable to think that. On the other hand, if you get acceptance below, well, if you actually so close, and if you start getting below the M low, the chances are that you will repair this triple low and go for the gap. And the question there will be, how do we deal with the overnight low? Is it taken or not? If you repair this low and you fail to take this overnight low, that will be a sign that the market is not as weak as you thought. It doesn't matter if it's proven lower. In any case, you have a balanced overnight inventory for the time being. Very prominent POC, very close to today's settlement. You can see that the overnight has been balancing and finding value around yesterday's settlement. And actually, if you open up the overnight, you see multiple attempts to continue lower and to test that Friday high, not being able to do it. So you have a very prominent POC around settlement. If you fail, the overall picture is that if in regular trading hours you fail to take or even approach this overnight low, I think it is possible that the inventory could be a little bit too short and you could expect a rally towards the all-time high. A lot of things can happen. The other thing is that the market is currently under pressure, given the little bit of uncertainty regarding the details of the US-Chinese trade deal. Apparently, there are some reports that the China is expecting some promises from the U.S. about no further tariffs and rolling back the tariffs in place. And the U.S. That's the leverage the U.S. is using to pursue the deal. So I don't know if that will be something that President Trump will be happy with doing before finalizing all the phases of the deal. I don't think he will be willing to compromise his leverage only for a phase one, perhaps promising some agricultural buying and stuff like that. So the market is under pressure. There's uncertainty there. If there is a negative response from the US saying that there's no way that will happen, or even talking about new tariffs and tariffs coming on in September, in December, the market could get under pressure and you could see a more meaningful correction. But for the time being, focus for the morning, is that afternoon range, the potential repair of that triple low and the overnight low. Those three references or areas are the ones that I will be looking for immediately after the open.